What's up, YouTube? Isaac's Trade here. How is everybody doing? Especially all the new investors that have joined the excitement and fuckery in 2021. Well, let's talk about why I don't see rate hikes that bad, what I'm looking to invest in, and a few pretty pictures I found of charts. And you want some financial advice? Well, balance the budget, have cash on the side, and relax. This is a long, slow game. You do not see the roots grow on a seed you plant, right? Think of it that way. Now, the economy can withstand normalization of Fed policy. A bearish agreement is the risk of the yield curve inversion, signaling a recession is likely. And well, this is if you don't know what the yield curve is, the yield curve is basically it's the slope of the yield curve gives an idea of the future interest rate change. So if it goes up, it usually means it goes up. If it goes down, then that means it usually goes like down, something like that. So they're saying that it might indicate that we're about to see a recession, but I mean, you gotta realize you come over here and you look at the list of all the stock market crashes. I mean, hell, since 2000, there's been what 14, 15 of them? 2, 4, 6, 8, 10, 12. Yeah, 14 of them. So, I mean, in 20 years, there's been 14. That's almost one crash every year and a half, roughly. So, it's not really that bad, okay? And you got to remember back when 2018, which is when I first started trading, and we were having this shit with China going on. I mean, look right over here. They said that this was going to, soar to the new Cold War heated up, and that was causing the market to really get smacked around. But one thing I did notice is that everybody is talking about the yield curve, so I did come and look at it. And if you do zoom in towards where we're at right now, the yield curve is almost getting pretty flat. Like it's never really. I mean, it has been this flat, but it's never really good when the yield curve gets flat because the profits are hard to come across. But I mean, the yield curve is usually a good predictor of a recession. The inversions are not as reliable as once thought, though. The inversions often happen well before the recession, and the signal turns off before the recession arrives. In fact, there have been several false signals over the years. Additionally, the 2009 inversion did not predict the COVID induction recession in 2022. So, like, what I'm saying is, we didn't expect this COVID shit to happen. Like, if you look at the SPY, when they did do the interest rates increase, the rate hikes, it wasn't that bad. I mean, it actually did very well for the market. That was right over. That was right here when all this bullshit was happening right here. They came out in like what January or was it December? I want to say it was December 24th or like the 26th, and then we just jettisoned up. And then when they came out and they did another one, which is like right here in 2019, I think it was right here. Everybody thought it was the end of the world, but they didn't do it, and the market continued to, continue to do this crazy bull rally. Yes, I understand cryptocurrency didn't really do too well up until we hit this point right here. Once they started injecting more money into there, but I don't really see it that bad because I thought it was that bad back in 2018, 2019, and it really wasn't. And the way they're painting this narrative, the picture they're drawing, it seems just so like 2018. Now, hell, I might be wrong. Who knows? This Vladimir Putin shit might fucking really blow up. But what I really don't understand is I remember, what's his name? Secretary Blinken said a few weeks ago that if any tactics like cyber attacks, hibernated attacks, and any effort to bring a government down, they would do something about it. Well, I mean, hell, last time I checked, they've already been doing all that shit to them. So don't focus on, I mean, yes, it is a big thing to worry about, but with everybody on it, like, we got a date. Usually what happens when we get a date, right? Remember with Saturday Night Live? It really wasn't that great, right? Okay, just remember that. Now, the one thing, it's good, you guys are going to probably laugh here. You're going to laugh because what I'm looking to invest in is actually China. If you haven't heard, China has actually been injecting large amounts of money into their economy over there. They've been doing it for quite a while now. For the past few months, they've been very quiet about it. But what I'm looking to do is I'm looking to acquire 2 stocks that are China-based ones, China companies. Yeah, I know everybody's gonna be like, bro, but you told me not to. Yes, but you gotta understand this stock market is a living, breathing creature. It is always evolving. It is always changing trajectory. It's always stuff's always changing. Excuse me. So now I'm looking into BABA because if China's dumping that much money into their assets, well, guess what? BABA's going to slap it. And I like where BABA is, but I would actually really like to see BABA come back and test the 108. But right where we're at right now, the 118 is when it tested the highs back in 2014. And I kind of think it's been just holding up right here in this area very well, because I want to say that almost lines up with when China started pumping money into their economy, and it basically kept BABA from coming down to a very low level. Now, if you don't know what BABA is, you had to smack yourself, because BABA is basically like China's Amazon. It's been around for a very long time. They were actually bigger before Amazon than Amazon was actually, when they were still doing books. The next one is Li Auto. I was going to go for NEO, but looking at the charts, Li Auto has this, it's a lot more volatile in it, I want to say. And I like this range that's in here because it is 222. This is a big jump back up that it did right here. I kind of want to say that Li Auto is going to end up doing the same thing. It's got this weird wedge going on right here. It's just, we got to wait and see. And now remember, none of these plays that I'm looking at are day trades. They're not swing trades. I'm talking about these ones for a long term, 5 years minimum. If you hold for 5 years, it's not that bad. I still have a few years left on some of my 5-year investments, and I might even change them up to a 10-year one. Who knows yet? I've barely started trading about 4 years now, coming up in 1 more year. And we'll see what happens. Now, if you haven't already, subscribe to the channel, and you know the rest of the bullshit. I'm not going to waste anybody's time. That's what I got for you. Don't panic. Just relax. Take a deep breath. Like I said, go look at the list of fucking crashes we've had. There's just so many. It looks like every other year there's a new crash. There's a new crash. It's the end of the world. It's the end of the world. Relax.